An insurance policy can look like a wall of legal language, but when something goes wrong, every line suddenly matters. The mistake many people make is reading only the price and the headline coverage. A policy is not just a promise that you are protected. It is a contract that explains what is covered, what is excluded, how much you pay, how claims work, and where the limits are. Start with the declarations page. This is usually the summary page that tells you who is insured, what is insured, the policy period, coverage types, limits, deductibles or excess, and premium. Think of it as the dashboard. It will not explain every rule, but it tells you the main settings of the policy. If something is wrong here, fix it immediately. A misspelled name may look harmless, but a wrong vehicle, wrong address, wrong business activity, or wrong coverage limit can create serious confusion when a claim is being reviewed. The named insured matters. If the wrong person, business, vehicle, property, or address is listed, a claim can become complicated. For example, a home policy may not respond the way expected if the insured address is wrong or the ownership details are unclear. Insurance is specific. The policy protects the people and property described in the contract, not whatever you assumed it meant. Next, check the policy period. Insurance coverage usually applies only between the start date and end date, subject to the policy terms. If damage happened before the policy started, it may not be covered. If a policy lapsed because payment was missed, a later incident may fall into a gap. Dates are not small details. They decide whether the contract was active when the loss happened. Then read the insuring agreement. This section explains the core promise. It says what the insurer agrees to cover if the conditions are met. In a car policy, it may describe liability, collision, or comprehensive coverage. In a property policy, it may describe damage to the building or contents. This is where the policy begins to define the protection you actually bought. After that, study the coverage limits. A limit is the maximum amount the insurer may pay for a covered claim. If your contents limit is too low, a major loss may leave you underinsured. If your liability limit is too low, a large claim can exceed your protection. A policy can be valid and still not be enough. Coverage exists within numbers. A simple example helps. If your policy covers personal belongings up to $20,000, but your actual belongings are worth $40,000, you may feel insured while being only partly protected. The problem appears after a loss, not before. That is why reading limits is not paperwork. It is checking whether the policy matches your real exposure. Now look at the deductible or excess. This is the amount you must pay before the insurer pays, or the amount deducted from the claim payout. A higher deductible often lowers the premium, but it also means more out-of-pocket cost during a claim. A cheap policy with a deductible you cannot afford may not feel cheap when you actually need it. Exclusions are one of the most important sections. Exclusions explain what the policy does not cover. This is where many claim surprises begin. A policy may cover sudden water damage but exclude gradual leakage. It may cover theft but require signs of forced entry. It may cover medical costs but exclude certain treatments. The exclusion page is not fine print to ignore. It is the boundary line. Read conditions too. Conditions are the rules you must follow for coverage to work properly. They may require timely reporting, cooperation with the insurer, reasonable steps to prevent further damage, accurate information, proof of loss, or police reports for theft. A covered event can become difficult if the policyholder fails to follow claim conditions. For example, if a pipe bursts and you wait weeks before reporting it, the insurer may question which damage came from the sudden burst and which came from neglect. If you throw away damaged items before taking photos, proving the claim may become harder. The event matters, but your actions after the event matter too. Definitions are boring but powerful. Policies often define words in specific ways. A word like flood, accident, Residence, business use, contents, or family member may not mean exactly what you think in everyday conversation. If a claim depends on a defined word, the policy definition can decide the outcome. Always check definitions for words that seem central to your risk. Endorsements or riders are changes added to the standard policy. They can expand, reduce, or modify coverage. For example, a rider may add coverage for expensive jewelry, rental car use, business equipment, or a specific property risk. Do not assume the base policy tells the whole story. Endorsements can quietly change the deal. Also compare replacement cost and actual cash value if your policy uses those terms. Replacement cost usually aims to pay the cost to replace damaged property with similar new property, subject to terms. Actual cash value usually accounts for depreciation. So a 5-year-old television may not be paid as if it were brand new. The payout method changes the real value of coverage. Look for sub-limits. A policy may have an overall limit but smaller limits for specific categories. Jewelry, electronics, cash, art, temporary accommodation, or business equipment may have lower caps. Someone may see a large total contents limit and assume everything is fully covered. Then they discover a smaller category limit after the claim. Check whether the policy covers the way you actually use the property. A personal car used for delivery work, a home used for short-term rentals, or a laptop used for business may need different coverage. Insurance is priced based on risk. If your real use is different from the described use, the policy may not respond as expected. When comparing policies, do not compare premium alone. Compare what is covered, the limits, deductibles, exclusions, claim service, waiting periods if any, and required documents. A cheaper policy may simply transfer more risk back to you. The real question is not which policy costs less today. It is which policy behaves better when something goes wrong. Before buying or renewing, imagine 3 realistic claim scenarios. For a home policy, imagine a burst pipe, theft, and storm damage. For health insurance, imagine emergency treatment, specialist care, and medication. For a car policy, imagine an accident, theft, and third-party damage. Then trace each scenario through the policy. This turns abstract wording into practical understanding. If something is unclear, ask in writing. Verbal explanations can be forgotten or misunderstood. A written answer from the insurer, broker, or agent helps you understand the policy and creates a record of what was explained. Do not be embarrassed to ask basic questions. The worst time to learn the meaning of a policy is after a major loss. So reading an insurance policy means moving in order. Declarations page, insured details, dates, insuring agreement, limits, deductibles, exclusions, conditions, definitions, endorsements, and claim rules. Once you know that map, the document becomes less intimidating. Insurance still has legal language, but you can see where the real decisions are hidden.